Okay, Michael, we're talking amongst ourselves. Let's bring it to the real world. I want Michael to tell you about a deal we closed. It was in Battle Creek, Michigan, I believe. And it was a little bit of had a lot of stories to it, but this is common with our deals. The reality is, a lot of the deals have stories. That's just the reality. But before we get into it, I always forget to say up front, so I want to remember: like our video, subscribe to the channel. If you have any questions, yep. Leave Michael. Why don't you tell everyone about this deal?
Okay.
I'll sit to the side.
So it came to us directly with a borrower, and they were in trouble. They had lost the property, but before I say that, they didn't actually say that in the very beginning.
No, they didn't.
They said they were facing foreclosure. So they asked us to help them provide a quick closing to help them keep their owner-occupied business. The collateral was actually sold already when
they lost it at the sheriff's sale.
Yeah, so it was already sold. We found out through title, I think is what happened, and it ended up the borrower went dark. Once we kind of confronted them about that, had to readjust some safety with our docs, right? We had to adjust from a regular mortgage.
Yeah, so this has a happy ending, but I want to just dissect this deal.
Okay.
So I don't want to say a lot of times, sometimes borrowers and brokers are scared or to tell us the whole story. Or they think that if they tell us, we won't do the deal. This was a case, and a lot of the cases is we find out anyway, and it's bad for the borrower and the brokers when we have to find out at the end. If we know up front, we can deal with it.
It also wastes a lot of time.
It wastes a lot of time and money.
Yeah,
and money. And in this case, the borrower lost the property at the sheriff's sale. I mean, that was pretty clear. But what they told us was, we have a sheriff's sale coming. And that wasn't the case. Okay, so go on.
Yeah, what was actually coming was their period of ability
redemption
to fight that sale was actually coming due. The owner already took back the property, right? They owned it, not a third party. So the lender...
They defaulted on another loan.
Yep, and they were ready to basically go forward with evicting them or pushing them out of the property. We were able to structure the loan as a sale leaseback, right? So that we could keep our capital safe.
I want to be clear.
Yes.
The borrower who approached us is sort of out of the picture at this point. We bought it. We did the transaction with their old mortgage company. We included the borrower and gave them the option. And this was all done with the borrower's cooperation. The borrower had an attorney.
Yep.
So yeah.
We helped negotiate that payoff to keep that down, so we could lend what was needed. We actually, I believe, the other lender, didn't they even hold a second? Am I right? A little bit. They held a small second because the borrower couldn't come up with enough money to cover what was remaining. There was taxes, right, for like 2 years. And
it got a little complicated. The lender retraded them. The lender agreed to one deal and then it changed their mind like a day before settlement. So it got a little...
But it was never a consistent sale price from the lender, right? They kept changing.
It was a moving target.
Yeah, but after, I would say this was not a quick closing. This went on for a few months, right?
But it was because of the borrower kept going dark.
Yes. Once we actually came to the solution, the borrower felt they wanted to shop us around. They went dark. We probably lost 4 or 5 weeks, I would say, easily. And then they came back to us once that redemption period had ended. And so now they basically had nowhere to go. We were able to still help them. Their lender worked with us.
Yeah. Can I just say something? If they would have come...
I'm sure I'm missing stuff.
No, if they would have come... This happens a lot. And we were talking about it yesterday with another deal, and I think it's good to talk about. We lose a lot of deals, not necessarily to competition, but to borrowers just not wanting to face reality. So in this case, the borrower waited until the redemption period was over. And what happened was, because the borrower thought they can get a better deal, was scared to make a decision, was incapable of making a decision, whatever, they wound up paying a lot more for it.
$75,000
more. If they would have dealt with it within the redemption period, they would have saved themselves $75,000.
Yes.
We see this time and time again. We've made a few videos, and I don't know how to say it strong enough. Michael's working with another deal.
Yes.
I think it's a restaurant, I forget what state, and we approved the deal. Lady signed the term sheet. Then people told her, she's getting a bad deal or whatever, and she went dark. In the meanwhile, I think it's this coming Tuesday.
That's right.
She has a sheriff's sale on her home.
On her primary home.
Her primary
and
home.
We were going to help her lend on her free and clear business restaurant that's free and clear, quick closing in 1 week, so that she could pay off the debt that she owes on her primary. Now she's going to lose where she lives.
You're right. We're not cheap. I'm guessing we were 13% on that.
She has
14%.
487 credit.
Whatever.
We were still going to help though.
She has a sheriff's sale on her home. She's going to wind up losing her primary home because she's still searching for a better deal.
Yeah.
You know, and by the way, her lender, I don't want to give the name, they're charging like a 40 or she has merchant cash advance loans. They're charging a 40 to 60% APR.
Yes.
So a lot of borrowers I found, when they're facing bad things, they put their head in the sand. They say, I'll deal with it tomorrow. I'll deal with it tomorrow. They buy into, I'll get a better deal. Someone says, oh, go to my friend. I'll get a better deal. And what happens is it makes the situation worse for them. They ultimately wind up losing the property.
Well, they're actually telling her to let her home go. Just let it go, walk away. And our solution was stay in your home, pay off the merchant cash advance loan, work in your business, and you can pay us off over, a 5-year period.
People consistently make bad decisions, and I find what makes it worse is when they don't deal with those decisions today.
Yeah.
You know,
You gotta take action.
You got to take action. If you have 5 things to deal with, they want to deal with the good things and they put off the bad things. I think it's I think I get it.
Well, it's about trust. A lot of times I have to tell people, please go online, look at our reviews, look about what people say about Gelt Financial.
With us, or you think it's,
well, why wouldn't she have pulled the trigger that long? She
here's-
paid us.
Here's what I think.
She did give us money.
I think if someone has to make 5 calls, and one of them is bad or 2 of them is bad, they make the good call first and they put off the bad call.
Yeah.
I think people have a tendency, and maybe I'm wrong, to put off the bad things and the painful things.
Yeah.
I
mean, my own personal self, sometimes you got to just pull the trigger, right? You got to just make the decision.
I learned early in my career, I deal with the tough stuff early in the day.
Yeah.
If I have 3 calls to make and one is a bad call, I deal with the bad call first thing in the day.
Yeah.
That way it frees up my mind. Where I think a lot of people, I don't know, I'm not a psychiatrist, what do I know? I think a lot of people put it off, and I think a lot of our borrowers, they put it off, they just can't deal with it. The lady who would talk, I don't want to mention names, the lady who would talk with it, I think she did that, she's going to lose her home for it, not good. And the deal in Battle Creek, Michigan, I think the same thing. I think it cost her $75,000.
But she closed, you know what I mean?
Okay, let's
She'll be
focus
okay.
on the good story.
She closed.
We
She's
delivered.
good.
We closed like 3 weeks ago.
Yeah.
She's in the
She's
property.
fully operational. It's a beautiful property. Most importantly, our capital's safe, right?
Yeah.
She's in business.
We lent $450,000.
Property's worth probably $650,000, $700,000.
Yeah, so it was a foreclosure bail. It sort of was and wasn't a foreclosure bail.
Right.
It was a weird situation. What else? No appraisal, no environmental. Obviously, we didn't depend on her credit.
It wasn't that's right.
It was really a property-based loan.
Yeah, asset-based, absolutely.
Asset-based. And we do a lot of asset-based. Doesn't mean we're going to do all asset-based, but we do a lot of asset-based. What else do we miss on this deal? Nothing? Okay. Remember, call Michael at 561-221-0900. Check us out at geltfinancial.com. Like the YouTube or wherever you're seeing it. Leave questions, subscribe. If we missed anything, let us know. We'd love to answer it. And remember, when your bank says no, we say yes. Take care and have a great day. Okay.